Around the start of a new tax year, everyone goes a little crazy for stocks and shares ISAs. Whether you're looking for a tax-efficient way to store your savings and investments, or just want to learn more about what the hell they are, this video will take you through the stocks and shares ISA essentials, how they work, if it's right for you, and how much they could set you back. A stocks and shares individual savings account, or ISA, is a type of account that lets you invest your savings in the stock market. What sets an ISA apart from a regular savings account is that any profits or interest you make from the funds in your account won't be taxed. So a stocks and shares ISA can be a great way to maximise your investments, as they act as a sort of totally legal invisibility cloak from the taxman. Every year you'll get an allowance for how much money you can deposit into your ISA, and this will renew every tax year, which in the UK goes from the 6th of April to the 5th of April the following year. For the 2022-2023 tax year, the ISA allowance is £20,000. To open an ISA, you have to be 18 or older and a UK tax resident, and you can only pay into one stocks and shares ISA per tax year. However, you can pay into several different types of ISAs, like cash or lifetime ISAs, for example, per tax year. Your £20,000 yearly allowance will be spread across your different ISAs, so you can't pay in 20 grand into each. Really frustrating if you're one of those people who's got more than 20 grand lying around in their savings. All stocks and shares ISAs follow the same principle. You pay in money up to £20,000 a year. That money is invested in the stock market, and any profits or interest you make or any dividend income are tax-free. Outside of an ISA, you'd have to start paying capital gains tax on your investment profits once you hit the threshold of £12,300, and only your first 2 grand of dividend income would be tax-free. There are several ways you can choose to invest your money. If you want to be very hands-on with your investments, opt for an ISA that lets you invest in individual companies like Greggs or Barclays, or otherwise manage your investments yourself. If you want your ISA to sort of tick away in the background, go for a robo-advisor or managed portfolio. With these types of accounts, you can choose the amount of risk you take on, and you might choose which sector you want to invest in or how ethical your investments are, but otherwise you leave the core management of your funds up to the company. A third option is to go for a mix of both. You can open a stocks and shares ISA with a broker or share trading app like Freetrade, for example, or via a personal finance money app like Moneybox, which might also offer additional savings accounts like a lifetime ISA or cash ISA. When thinking about the right investment style and platform for you, ask yourself, do you want to invest in individual stocks or ready-made portfolios? How much do you want to invest, as some providers have a minimum deposit amount? Are you interested in a range of accounts or insight tools, or do you just want a straight down the line stocks and shares ISA? And do you want a platform with educational features to help you learn as you go? The answers to these questions will help inform which stocks and shares ISA is the right one for you. And you can check out some of the links in the description below to start comparing providers. Your personal investment goals will largely determine the answer to this question. But in general, a stocks and shares ISA could be a great option for someone who's looking to put money aside each month and are happy to invest over the long term, as this will typically lead to higher gains. You can withdraw your money at any point, but if you then want to reinvest it in your ISA, it will count as part of your annual allowance. You can transfer your ISA from one provider to another, as long as you follow the transfer procedure of the provider you've chosen. If you have lots of debt, you should look at ways to clear that first before investing your cash elsewhere. If you want super easy access to your money in the short term, a current account or easy access savings account might be a better option for you. A stocks and shares ISA is way more risky than a regular savings account, but that added risk means added reward, and you could potentially get more out of your savings with a stocks and shares ISA. When the new tax year comes around, there can be a lot of buzz around ISAs, but unless you're maxing out your 20 grand allowance each year or think you'll max it out next year, try and just ride out the hype and stick to your goals, as unless you're looking to change your ISA or portfolio style, typically not much changes year to year. These days, a lot of stocks and shares ISAs will be free to open and set up, But there are a number of fees to look out for, including a monthly or annual brokerage or platform fee, fund or share trading fees, fees to withdraw money from your account, and fees to manage your account if you go for a managed portfolio. Your investment goals, which I mentioned earlier, will not only help to determine which platform and investment style is right for you, but also what sort of fees you're willing to pay to lock those down. For more information on stocks and shares ISAs and to start comparing the right one for you, visit finder.com by clicking this link up here. If you enjoyed this video, like, subscribe, and be sure to hit that bell button to be the first to know when a new video drops. As always, thanks for watching.